Good afternoon, gentlemen. How are we?
Doing wonderful. Thank you so much.
Good stuff. As well. Andrew, you come from more of a traditional finance background. Now you find yourself squarely in the digital asset world. How did we get here?
Well, it's the future, isn't it?
The
I
future
mean,
is now.
I mean, you look around and it's so inspiring to be here in Abu Dhabi with so many industries of the future in focus. And Bitcoin is underpinning a lot of that investment. So, I mean, from my point of view, I've grown up my life, the world's become progressively more digital, and digital capital and digital credit, I think, is an extremely natural next step.
We'll unpack that. We were having a great conversation backstage, and I really love the distinction that you're making. Brian, I feel like you came from investing more of a digital native first concept, and certainly you've done that with your fund where you're looking for value within the blockchain ecosystem, which I think is a really interesting distinction. Tell me a little bit about how you landed on that as a core thesis and where you see things going.
Yeah, of course. So my background is I got into the Bitcoin space in 2012. I was completing law school. And when Bitcoin finally clicked for me, which did not happen quickly because I did not have a computer science background, it took me probably 3 to 4 months of very much studying it. And I thought it would become the best performing asset for many decades to come. And I thought it would become the global monetary layer for the whole system of financial infrastructure that we have today. And it would basically replace the existing monetary layer that we have. And I built a venture capital business after law school across technology, consumer products, was running accelerator programs for public companies, the National Geospatial Intelligence Agency, the federal government in the US. And then as I was growing those businesses and working with those entrepreneurs, I thought, you know what, the digital asset is the next landscape of what's going to occur. And so exited that business. 2016, we launched Off the Chain Capital. And what our core thesis is we felt if Bitcoin was going to be the best performing asset for many, many decades to come, which is a core part of our thesis, we wanted to try to have a goal to outperform Bitcoin, which in the early days was very, very hard because there were not many instruments or types of products that you could invest in to try to get exposure to outperform Bitcoin. And then the Mt. Gox bankruptcy happened many years ago. And so our team developed a relationship with the Japanese trustee managing that bankruptcy process and created the way to buy those bankruptcy claims. And that was a huge light bulb moment for us because in the early days, that actually allowed us to get Bitcoin at a significant discount. And if we can get Bitcoin at a significant discount, that helps you outperform Bitcoin, right? So then we started taking that same strategy and applying it across a variety of different things, such as private equity, liquid strategies, where we're looking for forced or motivated sellers to acquire their blockchain assets at a discount and put that in conjunction with a portfolio that we hope over time will allow us to outperform Bitcoin. And in that part of our thesis, we've been able to accomplish that 6 of the last 8 calendar years out after fees. And so we think that if you can find very mature growth assets, but take a distressed approach to acquiring them. So we don't look for distressed assets, we look for distressed sellers of growth assets, which is a very important distinction. And that's what we think there's a huge market opportunity for that by merging that traditional asset management. We're very much of like a Warren Buffett, Benjamin Graham style investor, and then integrating into the traditional financial ecosystem.
Interesting. And Andrew, for you, again, coming from the institutional side, when did Bitcoin specifically, but crypto at large, start to really factor into your institutional thinking and where you were, maybe you had that aha moment where you said to yourself, there really is a home here and there really is a blind spot that's currently being missed in the market?
It was early 2020. I had been working at Mariner Investment Group for almost a decade, where I was responsible for a synthetic securitization fund. And we spun out from Mariner and formed New Market and bought out the GPs. And when we did that, I had the freedom to start to think about new strategies. And also at that exact time was the COVID liquidity supernova that burst over the world. And I just became really focused on inflation and looked at a lot of different ways that you sometimes hear, oh, you can beat inflation. We looked at timber, we looked at gold, but also Bitcoin. And the more that I got involved in Bitcoin, the more, I mean, I'm sure like many people that were here and who are listening, the more conviction I developed. And not just conviction, but to your point, the light bulb moment where I said, well, we can build with this as an element of credit. And that was when it became very interesting.
So walk me through that, because you were explaining to me where you're actually basically tethering the Bitcoin performance to the credit risk profile, which I think is just such a novel approach. And I could imagine the appetite's probably unlimited.
The appetite for borrowers is off the charts. I mean, it's incredible. But, you know, a lot of investors, you go into a meeting and they'll say, Bitcoin presents the risk. You know, what if Bitcoin goes to zero? But I think that that's not really a rational question, because we have 16 years of history, and the number of times that Bitcoin has gone to zero over that period of time is actually none. In fact, over any 4-year period, the worst performing compound annual growth rate is around 7%. And by the time you get to the 10th percentile, you're over 30%. So this is a very, very well-performing asset for understandable reasons. To me, the biggest risk by far is what if inflation persists? And there, if you look over the course of the last 15 years, every single year that's gone by, what has happened? Asset prices have gone up due to inflation. The cost of living has gone up due to inflation. Financial conditions have become more challenging. And so for credit investors, like large pensions, sovereign wealth funds, insurance companies, where they maybe have 25, 30, 35% of their portfolios in credit, to me, that's actually the biggest risk in those portfolios, is the possibility that they only get repaid, and that the value of getting repaid is much lower in real terms. And so the insight that we began to work with was, if we add Bitcoin to the structures and then share in the upside of the Bitcoin with our borrowers over the life of the loans, that we can significantly outperform inflation-adjusted returns while still delivering income for credit investors. So that's really the mission that we're on.
It's a laudable mission. I mean, unfortunately, I think some of that cohort group would have what I'd call contempt prior to investigation. But if they're willing to do the due diligence, I think the opportunities are absolutely profound. Now, Brian, obviously you come with a different lens. And so for me, I couldn't imagine that you're probably up against, investors who sometimes say Bitcoin has lack of fundamentals or crypto has lack of fundamentals, but you're not necessarily concerned with the tokens per se. You're looking at more the infrastructure side and the assets that support the crypto ecosystem. How are you valuing those?
So there's a variety of ways that we do that. So on the traditional private equity businesses that we acquire, some of our portfolio exposure there would be businesses like Digital Currency Group that owns Grayscale, or Kraken the exchange. We're looking at fundamentals. We're looking for revenue, growth opportunities, and then if we can find a business that's very mature like that, and the core thesis that we look for with those is they got to be profitable, minimum to no debt, and on a 1 to 3 year pathway to liquidity with positive free cash flow. Because that allows us to filter out the failure risk in those situations. And if we can buy a very mature business where we can acquire it from a motivated seller at seed round prices, we just bought ourselves 5 to 7 years of time, basically, because we de-risked that from a venture stage investment to something that's much more mature. So that's how we would look at valuing fundamentally for some of the businesses on the discount side with private equity. And when it comes to the liquid type opportunities that we look at, we have a series of models that we use. Like, let's use Bitcoin as an example. A lot of times people will say, why does Bitcoin have value? Bitcoin has value because it's the most advanced monetary system I think that's ever been created. It's the ability to be able to take an asset off the internet and move it freely around the globe at your own choosing. It's the ability to be able to move money through time and space instantly at the speed of light. And most people, it's such a huge paradigm shift, especially for large traditional asset managers, to really get their head wrapped around it, because it's so fundamentally different than what they're used to investing in and how they expose capital. But if you look at it from something that aligns with them, like models, that helps them get up the learning curve. So one of the things that we do every month on our website is we publish these models updated for free that we use to help us value Bitcoin. So for example, basic trend line analysis using algorithmic curves based on the historical price of Bitcoin, mapping that out linearly into the future. That today shows Bitcoin should be worth around $220,000, and we know where it's trading. It's significantly undervalued. We use things like stock to flow that takes the existing stock. This is often used for gold or precious metals, and that takes the existing stock of an asset, and it takes the issuing circulation of that asset coming in to the market, and that allows us to map out as well what an asset could be worth. So we have models for that both in dollars and using gold as the monetary unit. And another one that's really important to remember when it comes to valuing these token assets is how do you value a network? How do you take a business like Netflix and has the network effects of this, the more that it gets, the bigger it becomes, the more valuable it becomes. You use Metcalfe's law is the name of how you value that network. And what you do is you take the number of users in the network and you square it, and then you multiply that by the transactional value that flows through that network. And that helps you get an estimated fair market price of what that network should be valued at. And that even today shows Bitcoin is also very, very undervalued. So these are some of the things that we would walk through to learn about to see from a liquid asset perspective if we think it's under fairly valued or overvalued, and in the same concepts that we do with the private companies that I noted.
Interesting. Now, you brought up near instantaneous settlement, cross-border settlement. That leads me to talk about regulatory framework. Obviously, the US has started to work its way through putting more regulatory clarity in place, although we've stalled out a bit in that regard. The EU to a great degree as well, but we still see other jurisdictions that are not as receptive. We were talking about Saudi as an example, where it still can be challenging for especially institutional level players to get involved. What signals are you looking for? What changes are you closely watching that you think could accelerate or potentially derail institutional adoption?
Yeah, so the regulatory framework is incredibly important because if an institution doesn't know the regulatory sandbox they're playing in, they won't play in the sandbox at all. And that's what we've seen take so long, like using the United States as an example. We still don't have the clear regulatory framework in place. We're getting there. We had stablecoin legislation was passed. The next is going to be hopefully market structure legislation. But places like the UAE were very, very advanced. They put regulations dating back, I think, to around 2018 timeframe where everything's a digital commodity. And that's huge because look at the talent and the entrepreneurs and the insight and the brilliance that's been brought to this region by putting clear regulations in space, having the entrepreneurs understand where they're building, having the institutions understand what they're allocating to and where it's governed. And so that's the biggest hurdle for big institutions, in my opinion, is if the regulations aren't in place, they look at it as way too much as a reputational risk for us to come into early something like this until those are in place and the infrastructure is there. And once that infrastructure is clear and they understand what they're getting into, then the capital flows.
Now, Andrew, you're having a lot of those institutional conversations. What are you seeing, and from your perspective, when you're engaging with them, what are the most common misconceptions about Bitcoin or crypto that you encounter, and how are you addressing them or having those conversations with allocators?
I think that there are a couple of different flavors. One flavor is people that really actually are quite knowledgeable about Bitcoin. I mean, I'm focused on Bitcoin only. I think it's the signal amid a sea of noise. And so one key message that I try to bring to an institutional conversation is let's talk about Bitcoin, especially if you're looking to allocate a large sum or if you're looking to take a multi-year view on the asset. I mean, the world is becoming much more digital. Surely other digital assets will succeed over the course of the next 5, 10, 15, 20 years apart from Bitcoin. But as a lender, with the mentality of a lender today, I don't have a view on the longevity of any particular asset apart from Bitcoin, and I have a very strong view there. So the first thing that we talk about is Bitcoin, Bitcoin only, and then of course a lot of the properties associated with that. But you have many people at these institutions that really do understand a lot about it. What they have to overcome are their own set of institutional incentives, or probably put more accurately, institutional disincentives, where the desire is not to rock the boat, or the desire is to just keep things, as they're going. I mean, it's challenging because if you're a credit investor and you say, I'm taking the risk of inflation seriously, I'm going to invest in this strategy that protects against inflation, then a very natural question is, well, what does that mean for the rest of your portfolio? And few people want to invite that type of scrutiny. But Bitcoin incentives change people's frame of mind, and I think it's had that effect on a lot of people that I know, a lot of people that I've personally seen, and I believe that we'll see that more and more throughout the institutional community over the course of the coming months and years.
So for both of you then, walk me through what successful institutional adoption really looks like. Is it X number of dollars? Is it on-chain, off-chain? Is it based on holding on corporate balance sheets? Do you need custodians? Like, how do you see this playing out long term?
You want to start?
Well, for me, it's all of those things, and it's really conceptualizing Bitcoin as a financial tool to accomplish your goals. I mean, why should a corporation hold Bitcoin on their balance sheet? It's not for the sake of keeping score. It's for the sake of adding to the balance sheet of the corporation an appreciating liquid asset that gives them a lot of options, either in times of challenge or in times of opportunity. Ideally, the Bitcoin is going to enable them to finance their future growth trajectory much more effectively. Ideally, the Bitcoin is going to make them a more attractive merger partner with other corporations. It's going to make them be more efficient in different ways. For institutional investors, our prescription is think beyond a standalone long-only allocation to Bitcoin, whether it be through Bitcoin as it is or through an ETF. Think beyond that. Think instead, how can Bitcoin be a tool to reshape the risk-adjusted returns of different asset classes? Like what I was mentioning for credit earlier, I think credit is extremely vulnerable right now due to inflation. And that's the key issue, is that long-term credit investors, if they just get their money back, they'll have real losses. But if you add some Bitcoin, you can reshape that. You can improve the quality and reshape that. And so I think thinking of Bitcoin in this way, how can adding a little bit of it dramatically reshift the efficient frontier of investing in other categories of asset allocation, is ultimately going to lead to a more durable, more significant, more widespread adoption of Bitcoin than a long-only allocation on its own would stand to do.
Yep, I agree with everything that was noted, and I think that some additional components is that Bitcoin, in my opinion, will get bolted onto every single investment strategy. So you will have real estate funds, which we're already seeing that are Bitcoin-backed, credit funds, anything you can think of that's traditional asset management will have a Bitcoin integration component to it. And I think one of the ways we're seeing the fastest newer on-ramps and newer interest in institutional adoption of Bitcoin is what's happened with Bitcoin Treasury companies, right? So what Saylor did with Strategy, who figured out this amazing mechanical hack, in a sense, in the market, that there's all these institutions and insurance companies that, because of their own investment mandates, can't go buy and custody Bitcoin direct, but they can buy a public company stock or they can buy convertible debt from a public company. And so it created this massive new on-ramp. And so one of the things that we've been very bullish on in our portfolio is we've been investing in Bitcoin Treasury companies all over the world now. So we have exposure to ones in Brazil, in the Netherlands, out of Europe, the largest one to go live on the London Stock Exchange coming up, a bunch in the United States. And the way we look at that is, in each of these jurisdictions, you're going to have these institutional on-ramps to hopefully get their first exposure to Bitcoin via these publicly traded vehicles that trade under the regulatory infrastructure of those respective jurisdictions. And so as that occurs, I think that's a huge step in the right direction to help people start getting exposures to buying those things. But eventually, it's going to get integrated into absolutely everything. And I think, like for me, long term, I've done this for many, many years, is I very much think in a Bitcoin-denominated fashion. So when I got into Bitcoin early on, I'd always had this mindset, which was, if I'm going to invest in something, I have to justify that this investment that I'm going to make can generate me more units of Bitcoin than I would just buying Bitcoin itself over the timeline I want to hold it. And 95% of the time, you don't make the investment. It's better just to hold Bitcoin. And that's what the performance has seen over time. But that 5% of the time, there is times for outperformance of new opportunities, and we're seeing more of those. And I think Bitcoin Treasury companies is one of those. I think institutions will start to recognize that properly executed Bitcoin Treasury companies that develop, whether it's a pure play, depending on the jurisdiction, or the right products and services suite that are Bitcoin native in the space, can generate that alpha over Bitcoin's performance. And I think there's so many other ways to think about it too. Like imagine if you have the family that owns the predominant collection of Rembrandt paintings, which I believe right now is in the side of a vault in a mountain. Imagine if you could take those Rembrandt paintings public, bolt a Bitcoin strategy on top of it, and then all the markets could get exposure to owning some of those valuable Rembrandt paintings with Bitcoin bolted on. I think we're going to start to see really novel, unique applications. Imagine a music label that has some of the most popular artists in the world, and you take that artist's collection of intellectual property, and you take that public and you bolt Bitcoin on top of it. That's a brand new way that you could have integration in ways that we're not seeing today, but I believe we will see these types of use cases and applications play out over time, which will just enhance the institutional adoption in a variety of ways.
I think that's fascinating. I think you're spot on. The caveat being properly executed, 100%. So in our closing moments, I'd love to hear from both of you. What gives you conviction about Bitcoin today? Not just price action, but something that will look out the next decade, 3, 4 decades, not just the next cycle.
You want to start, Erik?
Yeah.
I think that the biggest source of conviction that I have is everyone who's here in the audience today. And every time that I come to a Bitcoin conference or I listen to a Bitcoin podcast or I really engage with the community, I find it incredibly inspiring. I mean, the builders that are at work here are ambitious, they're focused, they are have significant integrity, intellectually honest. I think that there's a lot to look forward to based on the things that folks here in this room and in our broader global community are building today.
Yeah. I agree. In my opinion, I think that seeing the growth of this space over the last 14 plus years that I've been involved, going from very small Bitcoin meetup groups where there was 5 people in the room to now seeing conferences like this where there's people and now all around the world. And I think last year at the Bitcoin conference that we had in the United States in Las Vegas, there was 30,000 plus people. I think there's going to be close to 50,000 this year, and then we have them in all these new jurisdictions popping up. Yeah. It just goes to show people are starting to get it. People are starting to understand that we need an escape hatch. We need something that we can store our value in over years into the future to not only hold value for ourselves, but for the generations to come and the people that we want to pass it down in our lives that are important to. And institutions need this as well. They need new ways to accrete value to outpace the rate of inflation and all the other crazy things that happen around the world. And so it makes me excited to see just the massive expansion of understanding. Like each year, more and more people get it. More and more people are starting to wake up to what the opportunity is. And not only the opportunity, but the need. It's incredibly, incredibly needed. And one thing that I'll end on is, our team put out a movie last year, our CIO at Off the Chain, called God Bless Bitcoin. I actually spoke about this at Bitcoin MENA last year. And if you haven't had a chance to watch it, please go check out that film. You can watch it for free at godblessbitcoin.com. We've had it translated into Arabic as well. And it just teaches people, like, what is the importance of Bitcoin? Why is it so important as a technology, as an asset? And then it brings it back to ancient scriptures and how monetary systems are defined in ancient scriptures. And it's actually very similar to what Bitcoin's become today. So it gets me excited that we have foundational principles from the world's major religions all around the world in ancient scriptures on how a money system should work. And it's really, really close to what Bitcoin's become today. So it gets me very excited about now. It gets me excited about what's to come in the future, both on the retail side and the institutional adoption.
If I could just, Brian, I found your comments today to be actually really interesting. I want to talk to you about the music and the art and the way that you brought in ancient religious philosophy is very inspiring. 'Cause here in Abu Dhabi, I think that we're all seeking for a more virtuous structure of monetary systems. And with Islamic finance, there's a lot that we can point to there, which also has a strong tradition in Judaism and in Christianity, lending at interest, sharing in the risk. It's a very interesting model. But I was inspired to re-enter the conversation because you made a little shameless plug. And you were saying, what gives you the most to look forward to in Bitcoin today? And I would say, if you haven't had a chance to take a look at the 1031 team, it's really worth taking a look at 1031.vc. They've built, full disclosure, Battery is one of the portfolio companies, but they've built a tremendous portfolio of builders in the space. And they're really thinking about it from a point of view of first principles and philosophy. So I'd highly encourage anybody who wants to be inspired to take a look at some of the portfolio companies that 1031 has built over time and really begin to think about how to broaden the aperture of what it means to build in Bitcoin.
I love that. That's a great
In
closing
just
note.
16 years.
Okay. Let's thank these gentlemen for their time and their knowledge and for what they're doing in this space.
Thank you, everybody.